Buyers are shocked when they hear what an interest rate change can do to their monthly payment. Now, a couple of things to remember. Monthly payment is more affected the larger the loan size when the interest rate changes. So if you're borrowing $100,000 versus $300,000, that change in interest rate is going to be more impactful on the larger loan. Hi, this is Recharging with Champions. I'm your host, Charlotte Harrill. Today, we're going to give real-life examples of what the principal and interest change is when we increase or decrease your interest rate. Let's start with some real numbers. Going to do a loan amount today of $350,000. And today we are only talking principal and interest. So remember, remind your clients that on top of principal and interest, you have taxes, insurance, mortgage insurance. Sometimes you have homeowners association. There are other fees that are going to be a part of their monthly payment that are on top of the principal and interest. However, the principal and interest is what is changed when you have interest rate changes. So today we are talking principal and interest on a $350,000 loan. The national average for an interest rate for a long time sat between 3.5, 3.75, 4, 4.25. And that little span for years we sat there. So a lot of people got really comfortable and used to an interest rate of, let's just say an average of 4%. So let's take that $350,000 and let's put that at 4% interest. And that's going to get you a monthly payment of $1,671 as your base principal and interest before taxes, insurance, and all of that is in your payment. So look at these numbers and notice that the monthly payment base before adding taxes and insurance, before adding everything else, is $1,671. Now take a look at that same loan, $350,000. Now we're going to do a 6% interest rate. Again, we're talking 30-year terms here. So 30-year term, 6% interest rate, principal and interest only, is going to put your monthly payment here at about $2,099. I'm rounding up, but that's the base payment before taxes, insurance, MI, homeowners association, right? So that was a big jump from $1,671 to $2,099 for just principal and interest. So now let's turn the dial up a little bit more. The national average for the month of January 2025 has been hovering right around that 7% rate on a 30-year fixed. A little bit high, a little bit low, depending on the day, but 7% is really close to the national average. So now we're looking at 7%, $350,000, 7% over a 30-year term. Principal goes up to $2,329. Again, big difference from our $2,099, just that 1% difference. So here's what I want to stress. Interest rate does matter. However, the difference between a 6% and 7% is a couple $100, but getting the people in the mindset that we're at 4% up to a 7%, that's a bigger jump. We have to ease them into it and show them the numbers. So make sure you grab the graphic that I've got on Recharging with Champions. I do actually have a graphic template for this exact post. So make sure you use the graphic template that I've got for you. It is a video template. So it's got the numbers in there, and then it's got a spot for your video that you can just drop in your own video using the script. And oh, by the way, Recharging with Champions during the beta time, so during the first couple of months that it's open, is going to be completely free for lifetime for anybody that registers. So make sure you register and use code word LEGACY to get onto Recharging with Champions at no cost forever. Get the free scripts, the video templates, marketing tools, all kinds of fun stuff at no cost at rechargingwithchampions.com. And please share this with your lender friends, your other realtor friends. We want to change the narrative and take our business up a level. Join in and we'll see you tomorrow.